I would now like to introduce today's presenter. Sakshi Garg, Vice President, is the global leader for Everest Group's location optimization practice and an expert in location and workforce strategy topics. She is a trusted advisor to clients in the areas of location, portfolio optimization, talent strategy, and GBS model strategy. Parul Jain is a vice president with Everest Group's global sourcing team and leads the firm's locations and workforce advisory practice. Sumit Kumar, practice director in Everest Group's global sourcing team, has rich experience advising companies on location assessment, workforce strategy, and peer benchmarking across functions, industry verticals, and regions. And with that, I would like to turn things over to Parul.
Thanks, team. So today, first of all, welcome all to the session. The way we've outlined the agenda for our webinar today is 3 parts. First, we will start with our rich market data tracked by our dedicated locations research team. We'll then move on to the second section. Insights on this section are powered by our newest yet to be launched product, Talent Genius. And we'll cover more details about our platform during the session. And the third part, we'll end with Q&A and answer some of the questions that some of you have already shared with us, and also the questions that we received during the webinar today. So starting with the first part, talking about the lay of the land and a brief understanding of the overall global services market from a location standpoint. So this is a great and a good story. So we've got 2 kind of charts, interesting charts here. The left chart elaborates the growth story from a revenue standpoint, and the right chart talks about the headcount story. Note that all of these estimates that you see here are reflective of the total services exports for global services industry. This includes the revenues from in-house shared services organizations, GBS organizations, as well as revenues from third-party ITBP service providers. This does not include revenues from domestic or national markets. So the great part of the story is that the global services market has been recording phenomenal growth, a 2-year run post-COVID during 21 and 22, on the back of large-scale vaccine rollout, quick mass adaptation to hybrid models, increased digital adoption among traditional players, and the release of a lot of pent-up demand that was being held on in the initial years. Now, the good part is we expect the market to remain resilient in 2023 as well, despite the impending recessionary sentiments. We are seeing companies considering increased leverage of outsourcing and offshoring model overall contributing to the global services growth, given the underlying cost optimization pressures across the verticals. Now, this is particularly interesting because usually when we see that there is a recession coming in, it also brings in high unemployment. However, the current situation is fairly unique in the sense that the demand for talent is outstripping the supply for talent. And we'll talk about some of these demand supply dynamics even during our webinar today. Now, comparing the 2 parts here, overall, we see that the headcount growth is expected to be a tad bit lower than the revenue growth. And this is driven by the heightened emphasis on adoption of technology, RPA, majorly to infuse efficiencies into the overall delivery engine. Net, we expect the market to clock about $300 billion of revenue by the end of 2023, nearing about the 10.4 million mark in terms of headcount. Now, if we were to talk about and double click on this and understand how this growth reflects across different geographies, we will recommend taking both a headcount view and also a view by what's happening in terms of new delivery center setups. Now, from a headcount perspective, the regional shares for APAC, which is Asia Pacific, Europe, Americas, which includes both North, Central, and Latin America, and Middle East, Africa, we see that Asia Pacific continues to command more than 60% of the share. Europe has held more or less a stagnant share, and Americas is growing marginally each year. However, from a new center setup perspective, 2022 has been a record-breaking year in terms of overall center setups. We saw strong rebound recovery, touching almost 400 new centers, doubling to what the industry saw just 2 years back in 2020, when the overall the number of center setups hovered around 200. Now, while the overall pie itself has increased, when you look at the new center setups, the largest takers in terms of geographies are APAC and also Americas. Interesting to see their story here. This trend is similar for both service providers and GBS or in-house centers. Now, a lot of that is also driven by countries changing their approach towards containment of COVID, contributing to a lot of rise in the new centers. It's also distribution across multiple cities. Particularly talking about APAC, and we would want to uncover this further. Let's move on to the third click, which is talking about countries now from the regions as well. Now, if we were to look at the activity from a new center setup perspective and talk about the top 10 locations that have witnessed maximum growth, this is how it unfolds at a country level. So for the past 3 years, the top 10 contenders are listed here. Now, India continues to be the torch bearer for new center setup activity. And if you look at the growth story for India from 54, 72, and now at 158, it's a glorified margin that we see that has been kind of witnessed in the last 1 year. Now, within India, Bangalore had about, I think, 40 odd center setups. Hyderabad, Pune, Chennai, each witnessed around about 20 odd new center setups. In Europe, there has been notable uptick in Romania. We also saw increased westward shift with Spain and Portugal rising up the ranks. In Americas, Mexico continues to grow, particularly from an IT standpoint. Costa Rica continues to grow despite a smaller population base relative to its peer locations. And the interesting story is also for Colombia, and we have more details on Colombia in the next section, where we've seen increased traction, particularly on the contact center or the business processes side. With that, let's launch our poll for today. What we have for the audience today is we want to understand what change are you seeing in the talent market from an IT BPO services in your operations. The options are fairly straightforward in terms of significant slowdown to significant growth. It'll be interesting to see what you are also witnessing in your organization, and we have some of the findings from the market from our own tracking as well. So actually, I'm seeing a mixed kind of a view here. Most of them centered around moderate growth to moderate slowdown. It's interesting to see there are neither of the extremes that kind of gain momentum here.
Yeah, and I think that's reflective of the view that's coming in the subsequent slides, right? Where some locations are still holding strong from a demand perspective, whereas others are seeing slowdown. And I'm guessing the webinar attendees represent a good mix of, people from various locations and have, a combined, what we are seeing is kind of a combined view across locations. So I think the poll has closed now. So I think the results tell us that about 39% are seeing some slowdown, right? 17% no change, and 36% are showing some growth, whereas only 8% are showing significant growth. So yeah, it's a pretty balanced mix, which is, I guess, reflective of the various state in which various locations are currently as far as the demand trend goes. Okay, so let's move to the next section, which is going to focus around where are the best locations, right? At this point in time, what's happening across various locations, which are seeing more traction, which are seeing more interest, where competitive intensity is high, which are seeing a surge in demand. So we will discuss all of that. And, we also thought, let's ask this question to our latest AI chatbot friend, ChatGPT. And we literally asked ChatGPT, which locations are seeing softening of demand for IT BPO services talent. Now, unfortunately, ChatGPT data cutoff happened in 2021. So it couldn't provide us with the latest information on various markets. But, I think it was spot on in terms of how this IT BPO market is evolving. But we couldn't get further insights by location in terms of what's happening. So just thought we'll test ChatGPT with this question. Okay, so Parul alluded earlier that this second section is powered by our yet to be launched product, which is called Talent Genius, which is going to launch next month. And let me just spend maybe a few minutes talking about this platform. So Talent Genius is an AI-powered talent and location intelligence platform. I think many of you are aware that Everest Group is a leading voice in the market as far as location and talent insights for IT BPO services industry. And with this platform, we have kind of created an online platform which our clients will be able to access and get location and talent insights on their fingertips. Okay, so what you will see in the second section, most of the insights are actually coming from Talent Genius directly. So the questions that we will answer in the next set of slides are going to be focused on what are the top trends across key delivery locations, which locations are getting hotter versus cooler from a demand perspective. Are there any particular roles which are witnessing any slowdown? Are there any tier 1 cities? Are tier 1 cities as congested as we typically think of them? And we will be focusing on two functions, IT and contact center in today's discussion. When we say IT in the discussion today, we are looking at information across IT ADM and IT infrastructure, whereas in the actual tool, you can actually see the distinction. But today we have sort of combined and we are giving an overall IT picture. And then we will also talk about contact center as we discuss various locations and what kind of competitive intensity we are seeing across locations. So with that, let me first give you the big picture in terms of when we analyze the data for the last 1 year and also compared the data for recent quarters. And when we say recent quarters, when we prepared the webinar deck, we took the Jan 2023 data as the cutoff. So we are comparing November 2022 to Jan 23 with the previous quarter, or we are doing some year-on-year comparisons between Jan 2023 to Jan 2022. So I wanted to make sure that is clear as we progress through the rest of the material today. So in terms of the big picture, we see that the demand for IT and contact center services has definitely softened in major offshore, nearshore locations, which are about 30 locations, 30 countries that we are covering on a medium-term basis, which is the year-on-year comparison, and also on a quarter-on-quarter basis. So definitely the demand has softened. It is also because demand was at its peak in most locations in the Q1 of last year, which is basically Jan to March timeframe of 2022. There was a significant surge in demand, which has kind of come down in the recent quarters. Now, the maximum decline, if you look at, on a quarter-on-quarter or on year-on-year basis, and you compare across regions, EMEA and LATAM have seen significant declines. APAC still remains steady. I think we know EMEA, what happened at the beginning of the last year and how sort of things were a little bit unclear at that point in time, and that definitely is kind of reflecting in the numbers. LATAM is interesting. We are seeing a lot of interest, but if you just do a year-on-year comparison where it was last year, there is a significant dip right now. In terms of verticals, where we are seeing most decline in demand is BFSI, transportation and logistics, and technology and communication. I think we all kind of know, what's kind of happening in some of these verticals, and our data sort of corroborates that. The demand or the jobs in these verticals are coming down on a year-on-year basis comparison. What we also did was we looked at the volatility of demand. How much change are we seeing in demand on a month-on-month basis, and which markets are more volatile versus the others? And what we found was in IT services, the demand volatility is very high in tier 2, tier 3 cities and not in tier 1 cities. What that also means is companies who have invested in tier 2, tier 3 cities or are planning to invest in tier 2, tier 3 cities, the the motion of operating in those locations will be slightly different from tier 1, where you have kind of a still steady, demand curve, supply curve, whereas tier 2, tier 3 may not have the same smooth experience as you try to expand in some of those markets. And finally, when we compare tier 2, tier 3 city demand in EMEA versus APAC, we see that the demand in EMEA region is actually increasing. So the share, right, if there are if 50% or 40% of demand is coming from tier 2, tier 3 cities, that demand percentage has grown in the last 1 year in the EMEA region. But in APAC, it continues to remain steady, and it's neither going, declining nor increasing at a very significant pace. Again, very consistent with what we have been saying for the last, I would say, couple of years, that tier 2, tier 3 cities in EMEA, they continue to have, a very solid value proposition, right? Good infrastructure, a lot of incentives. Obviously congestion in some of the tier 1 cities has also compelled companies to look beyond the tier 1 locations, whereas in APAC, you still have a lot of room for growth, especially when you look at Bangalore, Hyderabad, etc. So again, that's the big picture. Now we'll start peeling the onion a bit more in terms of, IT services and contact center services. Okay, so you will see this chart or this, color code scheme running throughout today's webinar. And I thought I'll just quickly make you aware of how to read this color code or this legend. So we have a legend running from red to green. The light green and the dark green means we saw softening of demand, on a quarter-on-quarter basis. As I mentioned earlier, we are comparing November of 2022, Jan 23, November, December, January to the previous quarter, to the previous 3 months, which is August, September, October in this analysis. We are seeing, so the green indicates demand going down, orange or the yellow indicates demand is steady, and the orange and red means demand is increasing, whether it is moderately increasing or significantly increasing. So let's look at the Asia region first. We have India, China, Philippines, Malaysia. India, still seeing moderate surge in demand, on a quarter-on-quarter basis comparison in the IT services market. Philippines and Malaysia are still holding steady, and China. Sorry, can we stay on the previous slide? Rafael, can you bring the slideshow up?
Yeah, sorry, I'm not sure. Someone took over. Let me share again.
No worries. I think, Sakshi, in the meanwhile, there are a couple of questions coming around on the definition of softening and moderately softening. If you could expand a bit on that, that will also be helpful.
So it's based on the percentage change that we are seeing in the demand, right? If we have defined certain thresholds, and if the demand has gone significantly above that threshold in a positive manner, then it's significantly surging. If it has remained consistent plus minus 5% change, then it's steady. But if it has exceeded, let's say 30% higher or 30% lower, then we are calling it as, significantly surging or significantly going down. So that's the kind of thresholds we have defined for this.
Perfect. And I think while Rafael is also loading this, we're just covering the overall outlay of what we would want to cover today. We'll start with some pieces around IT services and double click on a couple of locations, and then move on to contact center, and then also cover the top 3 countries from a demand perspective. So Sakshi, back to you.
Yeah, so we were on slide 12. Sorry for that hiccup. So I was talking about India, and I think you all can see we are still seeing surge in demand, though, has come down a little bit in the past, few months in India, but still it's growing. China is largely softening. Philippines and Malaysia for IT services holding steady. If you look at the EMEA region, Most locations are softening, are showing signs of softening. By the way, in the tool, you can actually look at things on a month-on-month basis, right? We wanted to build a picture of what's happening in the recent times that's why we are looking on a quarter-on-quarter comparison. Egypt and Morocco, interestingly, are seeing growth in demand, and Egypt specifically, compared to the previous quarters, is seeing a surge. And I think the natural question is why that is happening. And if anybody has been tracking the Egypt market, there are a lot of incentives being rolled out, and there's a lot of government support for this sector. The economic forecasts for the country are also on the positive side. So there are a lot of positives happening from an Egypt perspective, which is also then making the demand in Egypt increase. If you look at Latin America, as I had mentioned earlier, while on a year-on-year comparison basis, which Parul presented earlier from 2019 to 2022, there has been a steady increase in terms of the traction that this region is receiving. But if you just look at the last 6 months, the near-term picture, there has been a bit softening of demand across, at least for IT services, across all of LATAM. Okay, now we will go sort of country by country, and we have picked up the key prominent countries in the nearshore offshore locations in the nearshore offshore landscape to talk about how they are performing. So we'll talk about India first. So the way to read the chart is, again, you have the talent demand trend. I'm not sure why this slide
Sorry,
is
I may remove slide control to presenters and take control over the slides. Yeah.
Yeah, please do that. Yeah.
And let's go to slide 13.
So I'm taking control. Sorry.
Thank you.
From now on.
Yeah, so we were talking about India. The way to read the slide is you have the same legend. The percentages that you see shows the demand share. So how the demand is distributed across different locations. And we have only picked up the top 8, 10, locations within the country. There are more locations which obviously IT services demand, more cities that see IT services demand. So what we saw, if you look at how demand in India has panned out, it was at its peak in Q1 of calendar year 2022. So Jan to March saw the peak in talent demand for IT services, and actually demand came down significantly in Q3. And if you have been following news, there are so many companies that have talked about how the hiring rates have reduced significantly in the recent months. So Q3 was the demand really came down. Now since Q4, which is October, November timeframe, the demand has again picked up, and it's now kind of steady, at least in the month of January. Among the tier 1 cities, if you do a comparison across cities, Hyderabad has seen the largest decline in talent demand, followed by Kolkata, whereas Pune has seen a highest growth. Bangalore has remained sort of consistent, but in terms of decline, Hyderabad actually has seen the biggest decline, and Pune has seen the highest growth. And if you talk about, the tier 2 locations like Ahmedabad, Indore, Chandigarh, when we looked at the data, Ahmedabad is, like right now, demand is surging. It's a red location. It's a hot location, but at the same time, it sees a lot of volatility in the market. Overall, I think, as we are aware, the tier 2 story in India is definitely on the rise. In general, there is a lot of interest in tier 2 locations, which wasn't there a few years ago, but specifically Ahmedabad is seeing a lot of interest and also, sees a lot of demand volatility. Over to you, Sumit.
Okay.
We can move to the next slide.
Thank you so much, Sakshi. Now, moving the needle to Malaysia. Malaysia's global services market landscape is largely concentrated in Kuala Lumpur, followed by a small portion in Georgetown as well. There is an emerging destination for global services named as Johor Bahru as well, but currently it holds a very small share in the overall global services talent market. Now, what we are seeing is that across KL and Georgetown, demand is softening for IT talent. And this is true for both the IT applications, development talent, plus the infrastructure services talent as well. However, the demand for overall IT services is picking up some pace as we speak in the month of January. And we expect some rise in the demand soon in Malaysia market, primarily due to factors around, let's say, availability of niche IT skills is good in Malaysia. So you get a lot of talent around cyber security, 5G, IoT, AR, VR type of talent. And that's mainly causing the shift in demand in January months. We are seeing a rise in demand in Malaysia. Malaysia also offers you a very stable business and operating environment in the whole of Asia region. It's very well known for its very stable business environment, and which further attracts the global firms as well to set up operations in the country. Now that was on Malaysia. If we move to Europe side, on the next page, we will see things around Poland. Now, in Poland, which is the nearshore European global services market hub, to be honest, it has a fairly distributed IT talent demand across tier 1 and tier 2 cities, something very similar to what we were seeing in India as well. So there were a lot of tier 1 cities, tier 2 cities as well on the maps. Same story for Poland. Now, Warsaw and Krakow hold around half of the market, around 50% of the global services talent demand share in Poland. But markets such as Gdansk, Poznan, Katowice, they also hold a substantial share in the talent market. Now, over the past 6 to 12 months, Poland was experiencing softening in IT talent demand. And this was because of myriad of reasons, be it Ukraine-Russia conflict, rising energy prices, very high market congestion in some Polish cities. But the country has witnessed a steep decline and steep softening in IT talent demand over the last 3 months. And this is primarily driven by increased focus on cost optimization measures, which makes offshore locations very attractive. And in the offshore locations, we were seeing on previous page that India is seeing a surge in demand. So some of the demand from nearshore markets is also moving to offshore markets as a cost takeout pressure is intensifying in the market. Now, double clicking on this, we identify that while IT talent demand softening is a trend common across all verticals in Poland, healthcare and consumer packaged goods segment are the ones which experience the highest talent demand softening out of all the industry verticals. So again, one interesting insight over here by a vertical standpoint. Now, moving to a country which is just adjacent to Poland, Romania, which is the next country that we have in the mix. 3 cities in Romania. It's Bucharest, Timișoara, and Cluj. They hold the lion's share in the Romania's global services landscape. And while IT demand is softening in Cluj and Timișoara both, Bucharest surprisingly has been able to sustain the talent demand for the past 6 months. And that's why you'd see an amber color for Bucharest, while Timișoara and Cluj are in the green shade. Now, this is primarily driven because of IT infrastructure workforce. So if we split it further and try to understand between application development and infrastructure, you would see that while application development demand has went down, IT infrastructure demand is still very high in Bucharest, especially for roles related to network and cloud. In tier 2 Romania markets, such as Timișoara, we are seeing talent volatility is also quite on the higher side. Now, compared to Poland, the first question arises that why Poland is something like that, while Romania is giving slightly different picture. Our hypothesis is that while talent is also one of the factors, cost of operations also has a big role to play in this particular scenario. So Romania also offers you a very good cost savings potential over the likes of Poland. So that might also be one factor that attributes to this steady demand in Bucharest market. Now, double clicking here and understanding the nuances by vertical, we see that IT talent demand continues to surge in some specific verticals, especially the likes of healthcare, life sciences, while retail and manufacturing sectors are the ones which have experienced a significant demand softening in Romania global services landscape. Now, moving from one geography completely to another one, moving to Latin America market, the country that stands out is Mexico. Now, we see that around 70% of the IT talent demand is in two cities alone. It's Mexico City and Guadalajara. Now, while Mexico also has some prominent tier two cities such as Querétaro, Monterrey, the IT talent demand is not so high in these markets. And from a demand perspective, what we are seeing is that while IT infrastructure services talent continues to be in high demand in the whole of Mexico, for IT ADM services, application development services, the demand has been softening over the last 5 to 10 months. Now, this is primarily again driven by reasons similar to what we saw for Poland as well, that cost optimization makes offshore locations very attractive. So, for example, in offshore locations, now you're able to get 24/7 support. There are not much of, you can, if you have some very complex tickets as well, you are able to support them via offshore location. You are able to provide real-time support as well. So all these factors push the needle towards offshore. Now, taking the step further and understanding this trend by vertical, we are seeing that demand softening is highest in the VFS, which is banking and financial services sector, and the healthcare space. And CPG industry continues to maintain a healthy growth rate. Now, on the next page, we talk about moving the needle from the IT industry to contact center services. So the global story remains very similar to what we saw for IT services. The demand is softening across geographies, be it Mexico, Poland, Argentina, China. But there are markets which are experiencing sustained demand, especially India, which continues to have a surging demand for talent in contact center space. In fact, most of the global organizations we speak with this sometimes say that there is no India plus one strategy in works in the global services arena. Egypt also has seen a sustained demand significantly because of lower cost of operations due to currency depreciation. I understand there are more nuances around these demand statistics, what we are seeing by each of these countries, for which I would like to invite Parul to take things forward. Parul, over to you.
Thanks, Sumit. Thanks, Sumit. And with that, let's double click on the top 3 locations. So first, covering India. I think the top 2 messages from this analysis that we wanted to definitely share, 2 revelations that stood out. One, between Bangalore and Delhi, almost 1/4 of the contact center talent demand seems to be concentrated in these 2 locations. And while we are seeing a surge in Bangalore for IT demand, the demand is fairly steady on the contact center side, whereas Delhi NCR is seeing increased interest even on a monthly and a quarterly basis as well. Interestingly, we are seeing a surge in the tier 2 markets of Chandigarh and Kolkata. The driver behind this is companies are now looking to deliver some of this less complex contact center work from lower cost locations. That's where there's a lot of good exposure to Chandigarh and Kolkata coming into play. Among the key tier 2 cities, Kolkata is also the city which has seen the highest volatility, joining back to the point which Sakshi was mentioning, that the dynamics or the steadiness that you would experience in a tier 2 city would be very different than what you see in a tier 1 location. Now, moving on to the contact center capital or the location of the world, which is Philippines. We're seeing here that on a YOY basis, the location has witnessed increased demand. The demand was higher earlier. Now we are seeing signs of some stabilization and hence more softening happening across different cities. Metro Manila continues to reside, majority of the demand in the overall country. Pockets in Cebu, Cavite, Clark, and Davao City, and also Iloilo, they're seeing some steady demand, but the overall base of the market in terms of size of the experienced pool is much lower if you compare it to Metro Manila. Moving on to the third location we wanted to cover, this is an interesting one, which is Colombia. At an overall level, what we see is that the demand for contact center talent softened in the H2 of 2022 compared to H1. On a year-on-year basis, it is lower across all cities in Colombia, but Barranquilla and Cali have had high demand volatility. Bogota continues to witness a lot of interest. especially on the back of increased perception relating to safety, security, improvement in the overall English language proficiencies and more stable environment, more success stories coming out of the region that's attracting a lot of traction. And the cost proposition for Colombia compared to its peer locations continues to be one of the key reasons attracting investment here. With that, let us move on to the next piece, and I'll invite Sakshi to share those insights.
Thanks, Parul. We thought, we will also share some insights by vertical. Overall, as we said, the story is pretty consistent. There is a wider softening of demand that we are seeing. India continues to be an outlier in most verticals. If you look at the service provider, which we sort of consider as a separate vertical in our analysis, again, demand in India is surging, it's increasing or has increased in the time frame that we used for assessment, which was also mentioned in the footnote. India continues to see good demand from service providers. If you look at technology and communications, it's primarily a yellow and a green story, which is what basically tells us most markets are cooling down as far as the demand from this vertical is concerned. If you also look at BFSI, which is the second last row, we don't see a red and orange story here. It's mainly a yellow and green story, which suggests that demand is kind of cooling down. Again, this can change in the subsequent months, as I mentioned earlier. Within India itself, we are seeing some kind of a revival starting Q4, and these trends needs to be watched out on a kind of a month-on-month, quarter-on-quarter basis, which you can do in the tool. But for the purposes of the webinar, we wanted to give you the most recent quarter-on-quarter comparison. If you move to the next slide, you will also be able to see, the roles where we have seen a significant surge or moderate surge or softening in demand. Again, we'll not spend too much time because honestly, this answer kind of varies by location. But we thought of giving you a consolidated view. So if you look at IT, most of the developer engineers, which are the largest portion in any IT ADM kind of stack, those roles continue to see demand. Whereas demand for some of the infra roles continue to remain steady. Some of the testing related roles is actually softening. In the contact center space, your customer service agent, role remains steady. Seeing a relative surge in content moderator. Again, the number of the size of the demand may not be very high, again, for this role, but on a percentage basis, this role is seeing a significant surge. And again, as I said, this will vary from one location to another. We are trying to paint a picture across 30 different countries, but depending on where you are trying to hire these roles, you will be able to see how the demand is trending for that role, for that location, for that city, using Talent Genius. If we move to the next slide, so how can the global services stakeholders use this information in making your location and talent strategy decisions? So we believe by having access to this kind of information, you will be able to review and tweak your work placement strategy, both short term as well as kind of medium to long term, if you have a solid understanding of the demand trends. Supply doesn't change dramatically month-on-month basis. There is a steady increase in supply that happens in any given market, but demand is more volatile, and it plays a big impact on how many people you can attract for your organization. So knowing these trends can help you in tweaking your work placement strategy. Should we plan to hire these roles in the next 3 months in Bangalore? Again, if you have those location options available in your portfolio, are we better off hiring it in some other location? We also see a lot of interest in tier 2, tier 3 cities, and if you have tier 2, tier 3 cities in your location portfolio, based on the demand trends, based on the volatility trends, you can reevaluate how you want to use tier 2, tier 3 locations, in what areas you would like to use them, what roles specifically would make more sense to be hired in tier 2, tier 3 locations. You can make long-term demand forecast adjustments based on the temperature of key markets, right? You will get a picture of how this market has shaped up over a 12-month period, and how you expect this market to shape up going forward, and that can play an important role in adjusting your demand forecast for a particular location. We also have some salary information, and you can in the actual tool, and you can see how your posture on salary and price negotiations based on market trends. Because if you're seeing a continuous sort of increase in salary, then obviously that means something else from a hiring posture perspective. And finally, if you're already present in 5 locations, but there are a couple of locations where you have had a lot of interest within your organization, but you can't sort of keep a tab on what's happening in those locations. I think with Talent Genius, you can definitely keep a track of what's happening in the locations, even if they do not exist in your current portfolio, and you may be looking at those locations from a future expansion perspective. So those are some of the clear-cut use cases, and obviously there are more. But from the information that we share today, we thought we'll highlight how this information can be used by location strategy stakeholders, work placement strategy stakeholders, workforce strategy stakeholders, to understand how to navigate the different talent markets, and how to then use the external information to make sure you are creating the most well-informed workforce and location strategy for your organization. Let's move to the next slide. And we wanted to talk about this approach that we actually deployed for a client, which had a large location footprint across about 7-8 different countries globally. And they wanted to understand how, using a combination of external and internal information, they can monitor their location portfolio. So what you have on the x-axis are the external parameters, which is talent trends, which could be function agnostic, like population, unemployment, and so on and so forth. Talent trends, which are function specific, operating environment, and business environment. And the whole Talent Genius product actually helps you get all these 4 information within the tool itself. On the y-axis, you have things like which are specific to you as an organization. So these are market parameters on the x-axis, but on the y-axis, you have your share and growth in the market. So what percentage of talent pool resides in your organization, and at what growth rate has it grown in the last few years? Ease of talent management. Are you able to hire quickly compared to the market? What's your lead time to hire? And what's your attrition rate? What's your retention rates? What your joiner to exit ratio, and so on and so forth. And then your brand perception, right? How well is your brand perceived in the market? And on both axes, you see the scale from red to green. Red means unfavorable, green means favorable, and same on the y-axis. Now, if you click further, Rafael, and maybe if you do 2 clicks on this, so what we helped the client with was identifying and plotting their location portfolio across these 4 zones. So the first zone, if you click, is what is the most favorable for you. So the talent and operating environment is favorable, it is towards the green, and your competitiveness in the market is also green. So you have a strong market position. For those markets, right, you need to expand and grow because you have a strong position and the market is also very favorable. So this could be, Metro Manila for contact center for someone, or this could be, a Krakow for, fund administration for another company. The second quadrant is the hold. So the market may not be very favorable. I'll say this, we are hearing from a lot of clients that, the market in cacao is getting saturated. So let's say the market fundamentals are moving towards the unfavorable side, but you still have a very strong favorable position in the market, right? You are one of the preferred employers, you have a strong, presence in the market across functions. For that market, your posture should be hold, right? Market may not be very attractive, but you can maintain your investments and exploit your position of strength that you have in the market. If you look at the third quadrant, which is basically watch and test, what that means is you either don't have a very favorable position in the market, or you may not be present in the market, let's say, but it's a great market in general. You may want to have a watch and test approach, because you may want to monitor that market on an ongoing basis if it is showing all the right fundamentals. The fourth quadrant is actually shrink or exit. So the market is not looking great. Your competitiveness in the market is kind of either coming down or is not very great. That's when I think both parameters are telling you that you should be looking at ways to either gradually reduce the exposure to market, or maybe even take some major action items to reduce your exposure in that market. And Rafael, if you could make the second next click. So so these are the 4 zones in our location portfolio management framework. Idea is to help you articulate and understand the right posture for a location in your portfolio, or a location that you're looking to expand in the near future. This combines both internal and external parameters to provide a more contextualized assessment. So this is not just based on the market fundamentals, but also your position in the market. And when we helped a client with this approach, we actually were able to plot various location function combinations for them, like tech in Hyderabad, contact center in Bogota, in one of these 4 quadrants, and to help them articulate what should be their stance for a given location. So let's move to the next slide, which is the offer for today. So as an attendee of today's webinar, we are giving you the opportunity to get an exclusive first look at Talent Genius. You can book a demo. You will receive a link soon in your chat window, which you can use to book a demo for this platform, which is going to launch next month, and see all the capabilities across locations, across talent monitoring, and so on, that this product can offer. Parul, back to you.
Thanks, Sakshi. With that, let's get into the third part, which is the Q&A for today. And I think we've received pages of questions. So let me begin with some of the ones. So Sumit, this is going to come first to you. I know you track this market very rigorously. So the question is, what is the outlook for contact center in the UK? Are UK clients preferring to look at nearshore or offshore locations for voice operations?
So it definitely means for CX operations, we are seeing a lot of nearshoring happening, especially to European markets like Poland, Romania, but there are some upcoming locations as well. There are some hidden gems like Georgia as a market, which is used for transactional contact center work. We are seeing, I won't say much of the work is being offshore per se because of the language, accent, and all those things. So a lot of work is not moving to India, but a lot of work is moving to Philippines, very good accent. A lot of work is going to Poland, Romania, but especially to the low-cost locations in Georgia. So yes, definitely the nearshoring and some bit of offshoring is happening.
Okay, thank you. I see 3-4 questions on a similar theme, which is around what are the views on Africa as the next location or a future talent market? And this is coming from few enterprises, providers, a lot of that audience. Let me take that up. I think when we talk about Africa, and we've covered that extensively in our reports and some of the other events that we've done, within Africa, there are multiple locations and each have a different value proposition that they bring to the table. If you talk about the most mature locations, like say South Africa, especially on the customer side, customer operation side, that has been one of the strongest contenders. When you look at North Africa, you've got locations like Egypt and Morocco, which have also experienced growth for IT and language support for French and some of the other African languages. Up until now, I think there has been very less activity in sub-Saharan Africa outside of South Africa, but this is starting to change. For instance, we saw tech players like Microsoft, Google, Twitter setting up regional headquarters or tech development centers in Kenya, Nigeria, Ghana, and the likes. We also saw some of the activity happening from the financial services sector. For instance, Stancy set up something in Kenya back a couple of, I think, quarters back. And then we're seeing more traction also happening in West Africa, for instance, in Nigeria. Net, we believe that the level of talent available in Africa, particularly in sub-Saharan Africa, will improve over the next few years. As we see more traction, more providers, enterprises getting their operations there, and talent from the local operators, we see an overall acceleration. But it may take a couple of more years to reach similar levels to those seen in, say, already established locations like in Egypt or South Africa. With that, let me pick up the next question. And Sakshi, I'm going to relay that to you. Is there a trend of more US-based companies outsourcing to nearshore locations like LATAM, rather than to more mature locations further across the globe? Which are the hottest locations in LATAM currently?
Sure. So on a comparative basis, yes, the trend to nearshore, the trend of nearshoring to LATAM is more prominent among US companies or US headquartered companies compared to European companies. As we saw earlier, on a year-on-year comparison basis, there has been a steady increase in the traction that Latin America is seeing. Also, there were a lot of questions in the webinar. I'm going to just digress for a minute that, you said that Latin America is growing in the initial part of the webinar, and then you were saying the demand is softening. I just wanted to highlight the initial comparison that we discussed was on a year basis, how the market, how the new investments are happening, whereas what we showed in the remaining part is actually how on a quarter-on-quarter basis markets are changing. And that information is very crucial for global services stakeholders to make sure their strategy is on point. Okay, after that digression, yes. So Latin America sees more interest from US corporations or companies with major presence in US and Canada as well. In terms of the key locations, again, there is a lot of interest in Mexico as an overall location, both for IT and BPO services, but probably a little bit higher on the IT services side. Colombia, one of the preferred locations within the region for contact center. Argentina is an interesting one because of the geopolitical and macroeconomic situations. We see clients just taking a wait and watch approach, in that 4-quadrant framework. It is going to fall into that wait and watch and probably shrink and exit over the next few months or quarters for many organizations. You also have Costa Rica, smaller talent pool. We did a LinkedIn Live with the Costa Rican agency about 3-4 weeks ago, and we are seeing a lot of traction in Costa Rica, but it is mainly with smaller service providers. That's where the bulk of, I'm not saying other enterprises are not coming, but if you look at the overall pie, it's the smaller service providers, because that market can only support a certain size of operations, a certain depth of talent. So again, a lot of interest in Costa Rica. Other than that, Chile, not so much, pretty expensive. Uruguay, interest, in bits and pieces, but not significant because again, it's a very smaller sized talent pool market. So that's really a high level view of the key locations within Latin America.
Thanks, Sakshi. And team, there are more details, extensive details on Latin America covered in few of our reports. Happy to share the links if this is of interest. And I'm cognizant of the time. So last question, and Sumit, this is coming to you. what characteristics define a new emerging delivery location? I know we've been talking about new locations, emerging locations time and again, but I think, yeah, setting up that definition will also help.
Okay. So a new or emerging destination is one where we see that global services players are entering the market, but not much at scale. There is some activity, but hiring is not very strong. Uh, it's primarily a spoke center, satellite center. It's not going to be a hub location per se. Work streams are also not very complex or judgment intensive work. Mostly it's support oriented work streams that is in play. But what we keep on hearing about these markets, one common theme is that market players are bullish who have already entered into the market. They know that the location has most of the levers which will propel the location forward in the global services arena, and hence the bullish nature persists across the entire industry. So that's the new or emerging global services destination definition per se.
Thanks, Sumit. And while I'm going through the list of questions, I think there are a couple of them which would easily get answered once the users also go through the Talent Genius platform. For instance, one of the questions is, with talent gaps everywhere, are there roles where we see a supply rebound? Yes, there are different roles and they vary across locations. There's also a question around which is, say, the next location which offers lower cost at the same time, great talent pool availability, and the question is more pivoted around specific skills. Again, that can be answered via the platform that we have, because I don't think there are details around what location, what skill is mentioned, so difficult to answer it in our webinar. But a lot of those inputs, if you enter in the tool that we have, you'll get very accurate and robust pointed answers. With that, let me wrap this up and we move on. So we do encourage all of you to take a moment and visit our blog section, our reports portal for related content. You can navigate via our homepage of our website. We have lots of information based on a lot of interviews, discussions that we keep having with location and workforce stakeholders. Our team has been engaging in so many of these conversations almost on a daily basis, reports, POVs, briefings, podcasts, etc., that are able to help you on the journey.